So this is a strong quarter and a beat for Coca-Cola all around. Numbers are coming out 63 cents a share. Adjusted, the estimate was 61 cents. Beat on the bottom line. Beat on the top line, too. $9.997 billion on revenues. About 9.9 was the estimate. It's the organic revenue number that's really shining here, and that really tells the story because it strips out things like currencies and other items. 6% growth for the quarter on organic revenues. Very strong for Coca-Cola. They're also raising their guidance for the year to 5% organic revenue growth from 4%, which is indicative of the fact that they have seen stronger growth, both for the first quarter and here in the second quarter. Coca-Cola has underperformed the market, guys, for the year, and also underperformed its arch rival, PepsiCo. And the reason is it's much more exposed globally. What we're seeing in this report is actually all the geographies were strong. Yes, Coca-Cola is still getting dinged by the strong dollar, which cuts into revenues. However, it is showing volume and price growth around the globe. I'll zoom in on the U.S. just for a moment. Really, the story there is pricing growth. So they're doing well selling smaller packages where they can get more bang for the buck out of the consumer. They're also innovating. And I'll just mention a few highlights. Beyond brand Coke, which is actually doing really well, double-digit growth in Coke Zero Sugar continues to show tremendous growth. I think that's replacing Diet Coke. I don't think that's a strong thing to say. People really liking that Coke Zero Sugar. They're also, and watch for these new products come into markets, they're testing out their new products like the Costa ready-to-drink coffee, which they say has 30% less sugar. They've tried that out in the UK. Watch for that to come to certain markets. They're trying a new energy drink. They've got this new Coca-Cola Orange Vanilla in the US. That continues to do well. So, Joe, you asked me about Pepsi,
I did.
I think a few weeks ago. What's the secret to growth for these companies? Is it innovation? Is it better execution? I think what this quarter shows you in Coca-Cola is it's three things. It's the innovation, getting drinks that people are excited about and that can grow. It's the execution, getting the smaller packages and the pricing right. And it's also the marketing, which if you put more marketing dollars, like Pepsi has been doing, behind some of these products, you're going to get the growth in places like brand Coca-Cola. And it's all working for Coke right now under James Quincy. The question is the market going to give him credit in a tougher global environment?
And the stronger dollar, I mean, a 9% currency headwind, that seems pretty steep.
That was the warning. So remember when Coke released guidance in February, it was very disappointing for the full year. And that was the key reason. It was macroeconomy. I just talked to James Quincy, the CEO. He said that the world, it looks gloomy right now in terms of growth. However, the results are looking better than even he expected. He was a little more negative on sort of the global economic picture and consumption going into the year in early months than what he's seeing right now. He also said what analysts going into this quarter were underestimating on Coke, besides the global environment, was also the weather. Yeah. But what he said they don't realize is that much of the growth in this company is outside the U.S. and Western Europe. It's in Asia. It's in emerging markets. You didn't have the weather problems there. So that's also why this is a beat on what the street was expecting.